Elevance Health down over 12%. This in the back of its latest earnings and guidance, as you might imagine, not good. Also dragging down the stocks of some other health insurers. Bertha Coombs is tracking the space for us. Bertha.
David, the problem again is elevated medical costs, resulting in a profit miss for the nation's publicly traded Blue Cross Blue Shield insurer. Now, while revenues topped estimates, on the bottom line, earnings came in 13% below expectations, and executives blamed the big shift that has been happening in Medicaid membership. That is the government program for the poor. With the end of the pandemic emergency period, over the last year or so, healthier folks have been coming off the Medicaid rolls. And so those who are still on there tend to be sicker and have more chronic conditions. As a result, the company says its medical loss ratio, the amount of premium dollars spent on medical costs, came in 200 basis points above expectations. On the call, executives said COVID cases were one of the big drivers for the spike this summer, as we've seen those elevated cases, and that's continuing here into the fall. Elevance is now lowering guidance for the rest of the year as a result, and you can see how the warnings are impacting its two main Medicare rivals, Centene and Molina Health today. This is something that they've all called out since the beginning of the year, the mismatch between the rates that they're getting and the fact that people are sicker now, the ones who are staying on the rolls. Elevance says they expect to be able to talk with states about their Medicaid rates and reimbursement rates, and that they can get that more in line going into 2025. But some analysts aren't so sure. David?